Money Day, guys and girls. If you're watching this, you're now locked in and learning with Vel. Now today I'm going to show you guys how you can make the LWV strategy 10 times more powerful. That's right, I said it, 10 times more powerful. Now to do that, we want to make sure that we're using different confluences, which are also known as confirmations, that can help us identify trades inside of our LWV strategy. So without no further ado, let's get into this. Okay, so the first thing we want to do when we're understanding the LWV strategy is we want to put ourselves in a prime position where we can try to find different reasons to take a trade. Yes, we're going to find the session candle. We're going to wait for price to move more than 40 pips and then come back to the candle. But if we can find other reasons surrounding this candle, this is going to provide us with a higher probability of being successful. So one of the easiest things you guys can look for, you've probably heard it all over YouTube, I've covered it in previous videos, is the fair value gap. Okay, ICT is very familiar. ICT is very popular, with the whole FVGs. He once upon a time used to call it imbalance. So for those of you who are part of the old school ICT group, comment in the section below. Let me know if you remember imbalance or FVG. If you came from the school of imbalance, just comment imbalance. If you came from the FVG, comment FVG, okay? But with that being said, of course, what we're going to do is we're going to look for candles that can provide us with imbalance or FVGs, okay? Now, in this instance here, I'm going to look around this area. Even though price is pushing higher, we're going to look inside this area because we can see down here, we can't really see much imbalance, but here we can see a very large imbalance. So naturally, this area is going to stick out to me, okay? And what we want to do is we want to see if we can find a session candle prior to this massive push up, okay? And we want to look for a candle as close to this imbalance as possible. Now, can we find one? Okay, so we find a candle. And what's interesting, guys, is the candle that we find, this big, massive bullish candle, is actually the imbalance candle. Okay, you actually can't make this up. This candle here is the imbalance candle. So that's going to be really interesting, number one. But then we can also find a London session candle right here as well. Okay, so I'm going to change the color of this one just so that you guys can see it when I extend it to the right. We're going to change this color to blue. No, let's change it to yellow. Okay. Cool. Now, we all know that the criteria when we're trying to take a trade out of the session candle is we either wait for price to move down or up 40 pips or more. We can visibly see that price moves up 40 pips or more. So if we look from the close of this candle here again, price moves up 95 pips. So by the time price comes back down now, okay, we take a buy from here and we take two buys, right? We take one buy from the head of the candle and we take another buy from 50%. We can very clearly see, I'll zoom in for you guys, we can see that price does not come down and stop us out of the trade, right? Which is perfect, it's fantastic. Yeah, if I put this right on the line, there we go. Price doesn't come down and tap us out. Price also doesn't reach our 50%. This is another reason why it's really good to mark out 50% of the candle, guys, because sometimes your 35 pips, especially if you're trading GBP USD, your 35 pips may not cover all of the candle. And price could come down into the candle and then push up. Therefore, it's important to make sure that we give ourselves a fighting chance. And that's by having two entries at two different places of the candle. Okay, so price pushes up and, we can see this trade as a dream, right? It plays into the candle, pushes all the way up, gives you a whopping 9-to-1 R&R, and then price comes down. But of course, price does keep pushing higher and higher and higher. Okay, so this is a great fancy trade that you could, of course, be involved in, but we wasn't involved in it, so we're not going to speak about this trade, okay? But what I'm going to do is I'm going to extend both of these session candles to the right. Reason being is because what price has done now is price has actually come down and filled the imbalance. So this here is what's left of the imbalance on this session candle. We're going to move it across to the right. And we're going to see if price comes back to fill the imbalance. and if we get another trade. Now, the chances are, guys, we probably will, okay? And this is a really good example because I don't know what the outcome is going to be, but it's a good example to show you how long these trades can potentially take. So if we have a look, this candle was on the 14th of November, okay? And hopefully price comes back soon. Okay, perfect. Look, price eventually comes back. Does this one come? This one comes really close, okay? Depending on what Forex brokerage you're using, this is FXCM, but depending on what one you're using, that wick could probably touch the top of this box here. But nonetheless, our New York session candle has played in, has tapped us into the trade. Now look, the same box, okay, 14th of November, price has come down in April the following year, okay? The following year, several months later, price has come down. Now, we already know that this zonal box is larger than 35 pips, right? We know this, right? It's actually, what is it? 90 pips, almost 100 pips. Let's call it a 100 pip box, okay? So we know that the first entry would have tapped us out. But the second entry here, let's see if we would have kept ourselves in the game. The second entry, we would have stayed in the game, okay? EA Sports is in the game. We would have kept in this game, and look what's happened, guys. Price has gone up. Okay, price has gone up to that high there. What's that? 13. Okay, it's 15 to 1. 15 and a half to 1. Now, I'm not saying you guys would have kept, 1% in this trade as price would have continued to go higher and higher and higher. You probably wouldn't have, but I go back to a previous video in the academy where I told you guys about understanding the market direction, understanding where the liquidity is. Now, if you go back to the liquidity videos, you guys would notice that I tell you this is a game of equal highs versus equal lows. So if we can understand if we can understand where the money is, then when we get into a trade, we now have to understand where are the areas that the market makers are going to target. Now, again, referring back to a previous video, whether it's the Fibonacci video or a video based on liquidity that I've done, which you guys can check in the academy on this YouTube library, you guys will be able to identify multiple reasons for why we can exit this trade. Meaning when we use our Fibonacci, we use it when to enter, but also when to exit. Okay, and we use the areas on the Fib to help us identify where we can exit the trade, providing we can find other reasons around those areas. So in this case, we're going to look for other reasons such as equal highs or equal lows, past areas of liquidity, okay? Meaning this area over here would be an equal low, okay? But this equal low already got taken out, right? This equal low already got taken out. Therefore, what does that mean? Well, because this equal low already got taken out, it means it's a past area of liquidity. Okay, so as price is pushing higher, we can target the current areas of liquidity, but we can also target the previous ones as well. Okay, now price pushes up, and like I said, it's given us a whopping 15 to 1 R&R, which is crazy, right? But why are we thinking, or why are we understanding now? Why have we understood, or not even why? I should really tell you guys just the answer. Okay. The simple answer to the question you guys might be wondering, which is how are we going to identify trades like this, is when we use multiple confirmations. Okay, in trading terms, we call it confluences. We already highlighted a candle that had a massive amount of imbalance, right? We had that candle here. Okay, we had the candle, and really we wouldn't have even moved the session candle. Okay, we wouldn't have moved the box like that. I just done that for the purpose of us identifying the imbalance. Okay. But that is where it is. So by the time we come all the way over here, we know, okay, we know that the trade would have tapped us out, okay? We know that the head of the candle would have tapped us out, but we would have been able to stay into the 50% line. So when we go back, okay, we have to understand, and this is something that, depending on what pairs you're trading, this could happen quite a lot. You have to understand, guys, that sometimes your session candle is going to be a very large candle, and in this case, the length of this candle, guys, it wasn't even accurate. The length of this candle, guys, was 100 pips. Let's measure this candle quickly. Okay, let's move this out of the way. Let's move it here, right where the imbalance finished. Okay. The length of this candle was 100 pips. If we measure it from wick to wick. That's 131 pips. That's how long this candle was, guys. So it's always going to be hard for us to be profitable by just taking one entry. You're going to have to be more accurate. There's going to have to be other reasons. Now, another reason that we could use is by understanding 50% of this candle, it's also going to be 50% of the imbalance, right? I have a 50% of the imbalance until price comes down over here. And when price comes down over here to take out some of the imbalance, well, the 50% has now changed a bit lower. But with the percent line dropping lower, it just means, hey, we're giving ourselves a fighting chance to say, look, just in case price, because this is what you have to understand here. Just because you've got a setup and you've got a criteria doesn't mean that the market is going to respect your criteria. It may still respect the decision in terms of the right direction, but we're only risking 35 pips, guys. Some people in the market are risking 100. They're risking 60. They're risking 80. They're saying, I'm covering this candle no matter what. But if you cover this candle for 131 pips, that means you need to make 131 pips before you get to 1%. That doesn't make any sense. That literally doesn't make any sense, because that would mean we need the market to give us 260 pips in order for us to be up 2%. So why would we put ourselves in a position where we have to be in a trade for longer just in order for us to make a little bit amount when we could risk 35, be a bit more accurate, which means by the time we're up 131 pips, guys, we're already up over 4%. We're not complaining. So it's the same thing that I would show you guys time and time again, which is identifying a candle that is next to something else that gives you a confirmation in the market. In this case, and remember, guys, the session candle only works on a 1 hour time frame. Okay, so in this case, we're looking at the imbalance, which we can see here, and we've also got a sell to buy candle down here, which we also would call an institutional candle. So we've got an institutional candle, we've got an institutional move here because price is aggressively pushed up. So there's more reasons for us to either take a trade inside of this imbalance zone, or literally what I should say is there's reasons for price to react inside of this area. We can't identify exactly where, because what we do know is the roof of this candle here, okay, of this eye candle that we can see here in the yellow box, price comes close and then it pushes away. So it doesn't even tap it. But again, that could just be because we're looking at the FXCM. Okay, the FXCM exchange is going to be different to Awanda. It's going to be different to every exchange platform on there. So maybe we become unlucky just based off of the broker that we're using. If a lot of you are using funded accounts like FTMO, maybe you guys get tapped into that trade, and that is a hell of a trade. But nonetheless, okay, that's a hell of a sniper entry. Nonetheless, when we look at taking this trade from 50%, what happens? The 50% line shows us, hey, we can take this trade, we can be profitable, and price can continue making higher highs and higher lows, higher highs and higher lows. So we're going to wrap the video here. If you've got to the end of this video, guys, I want you to comment lit side, LIT side. Let me know if you got to the end of this video by commenting lit side. And of course, as always, like the video if you like the video. Thank you for your time. Thank you for watching these videos. And I'm going to be providing you guys with more value. All you simply have to do is go inside the description. Okay, guys, go inside the description. You guys will get access to my Learn with Vel strategy in a lot more depth. You guys will get access to my free Discord where I provide you guys with value, trades, live streams, you name it, I'm providing it. So I hope to see you guys on the other side, and always remember that every day is money day. Peace.